Welcome to our deep dive into Walmart's latest earnings results and financial performance. As the world's largest retailer, WMT's numbers offer a unique window into consumer health and global economic trends. Before we analyze these critical data points, please like this video and subscribe for more professional market breakdowns. Let's get started. We begin with Walmart's current standing on the NASDAQ stock market. As of the latest update, WMT is trading at $122.99, showing a modest decline of 1.51%. The post-market activity shows a further slight dip, holding steady near the $123 mark. The 52-week range is particularly instructive, showing a low of $144 and a high of $223. This price action suggests that WMT is currently testing the lower bound of its yearly range, which is often a point of intense scrutiny for institutional buyers looking for entry points in defensive consumer staples. With a massive trading volume exceeding 26 million shares, the liquidity and importance of this stock to the broader indices cannot be overstated. This market snapshot provides the necessary backdrop as we transition from price action into the fundamental financial statements. The income statement reveals the sheer scale of Walmart's operations. Total revenue for the last reported quarter reached a staggering $179.5 billion, marking a 1.18% increase over the previous quarter. For the full year, total revenue exceeded $713 billion. Gross profit remained robust at $41.18 billion for the quarter, though year-over-year growth has seen some slight pressure, ticking down by 2.52% recently. Net income for the most recent period was $6.14 billion. These figures highlight Walmart's ability to generate massive top-line volume while navigating the thin margins typical of the retail sector. The visual data shows a consistent quarterly revenue climb, peaking toward the end of the fiscal year. For investors, the key narrative is the company's ability to defend its gross margins against rising costs of goods sold, which reached over $143 billion this quarter. Walmart's balance sheet reflects a massive global infrastructure. Total assets for the most recent quarter stood at $288.65 billion, representing a 6.58% increase from the previous period. On the other side of the ledger, total liabilities increased by nearly 7% to $186.14 billion. This results in a total equity position of just over $102 billion. The year-over-year growth in total equity has been significant, rising over 10% since the previous October. This steady expansion of the asset base, funded by a combination of retained earnings and strategic debt, underscores Walmart's role as a capital-intensive giant. For analysts, the relationship between growing liabilities and rising equity is a key indicator of how efficiently management is leveraging the balance sheet to fund new store formats and the rapid expansion of their e-commerce and logistics networks. Cash flow generation remains a core strength for Walmart. The company reported $9.10 billion in cash from operating activities for the recent quarter, contributing to a full-year total of $41.56 billion. Free cash flow for the quarter was reported at $1.88 billion, which is a critical metric for funding growth and shareholder returns. On the investing side, capital expenditures remain a significant outflow, with over $7.3 billion deployed recently to modernize the supply chain and digital capabilities. Financing activities also show substantial movement, including a $19 billion outflow in the latest period, likely reflecting debt repayments and share repurchases. Despite the massive scale of these flows, the net cash flow position remains highly dynamic. For investors, the ability to generate over $40 billion in annual operating cash is the engine that allows Walmart to maintain its competitive dominance while returning billions to shareholders. Looking at key valuation ratios, Walmart's stock currently reflects a premium market position. The price-to-earnings ratio, or PE, has trended upward over the last year, moving from approximately 25 times to a current level near 45 times earnings. Similarly, the price-to-sales ratio has expanded toward 1.4, and the enterprise value has crossed the $1 trillion mark. This expansion in multiples suggests that investors are willing to pay more for each dollar of Walmart's earnings and sales than they were a year ago, likely due to the company's perceived safety and its successful pivot to higher margin e-commerce and advertising services. The price to cash flow ratio also remains elevated at nearly 23 times. For value-oriented investors, these high ratios relative to historical norms are a point of debate, as they imply very high growth expectations are now baked into the current share price of this retail titan. Walmart's commitment to returning capital is highlighted in the Dividend Insights data. Payouts are made quarterly, with the most recent dividend per share at $0.23. The company has a long history of raising these payouts, with the 2025 fiscal year showing a total dividend per share of $0.94. Currently, the dividend yield stands at 0.74%, with the next ex-dividend date set for March 20th, 2026. The payout ratio remains healthy and sustainable, averaging around 34 to 35% over the last 2 years. This disciplined payout strategy ensures that Walmart can reward long-term shareholders while retaining roughly 2/3 of its earnings to reinvest in the business. For income-focused investors, WMT remains a cornerstone dividend king candidate, offering a reliable and growing stream of passive income backed by the world's largest retail revenue engine. The EPS and revenue snapshot provides a look at recent performance versus expectations. In the most recent quarter, Walmart reported an EPS of $0.74, beating the 0.73 estimate by 1.81%. This follows a streak of consistent beats, including a massive 14% surprise in early 2025. Revenue for the period reached $190.66 billion, slightly exceeding the forecast of $190.49 billion. Looking ahead to the next report date in May 2026, analysts are expecting an EPS of $0.66 on revenue of approximately $174 billion. The forecast for the remainder of 2026 shows a projected ramp-up in profitability, with Q4 2026 estimates climbing toward 81 cents. This beat and raise pattern is a primary driver of the positive sentiment we've seen in the stock's valuation over the past fiscal year. Finally, we analyze the performance by source and region. Walmart's total annual revenue of $713 billion is driven primarily by Walmart United States, which contributed $462.42 billion in the last year, a significant increase from the previous year's $441 billion. Walmart International also showed growth, reaching over $121 billion, while Sam's Club contributed over $90 billion. Membership and other income, though a smaller part of the total, grew to $6.45 billion, reflecting the high margin growth of their subscription services. The United States remains the dominant geographical engine, accounting for over $557 billion of total sales. This diverse revenue mix, spanning across domestic retail, international markets, and warehouse clubs, provides Walmart with an incredibly resilient business model that can capture consumer spend across various formats and economic cycles. In conclusion, Walmart's latest financial data reveals a company at the peak of its powers, successfully transitioning into a digital and services powerhouse. With consistent earnings beats, a fortress-like balance sheet, and a dominant position in both domestic and international markets, the fundamental story for WMT remains exceptionally strong. While valuation multiples have expanded, the company's robust cash flow and commitment to dividends continue to attract long-term capital. Thank you for joining us for this deep dive. Don't forget to like, subscribe, and hit the notification bell for more institutional-grade market analysis. We'll see you in the next video.